Well, hello again, everyone, and welcome to our latest market report. Dion Zakuski with you here, branch manager and director of Scotia Wealth, Central Alberta. And you know what? A lot has happened since our last report. With that in mind, today we'll check out a couple things. What I like to call the U.S. election circus, COVID developments, and what we'll call the vaccine rush, along with what's next for 2020 and beyond. You know, when I was a kid, I remember going to the old-fashioned circus. Rings were in the middle of the floor with various acts performing. There was lions, tigers, acrobats flying in the air. Quite the spectacle. And in watching any form of American television in the last couple of weeks related to the election, it kind of feels the same way, except with elephants, donkeys, and every political expert in the world filling your screen. But kudos to the American people who turned out in record numbers to vote on everything from their president to legalizing cannabis. It appears that Joe Biden is the recognized winner of the presidential race, although Trump and company are launching various legal challenges. From what we can see, it looks to be a split government with a Democratic president and a majority in their House of Representatives and a likely Republican-controlled Senate. As a quick review, here are the key policy comparisons of the two parties that make up Canada's largest trading partner. Looking at the various policies, the first that's important to us here in Alberta is energy and climate change. The Democrats are very focused on clean energy and not the biggest fans of pipelines, whereas Republicans want ongoing deregulation and continued exploration. When it comes to infrastructure, both parties are very focused on increasing jobs and pledging over $1 trillion in various projects. Related to trade, I think the America First policy will definitely continue, and both parties would play hardball with China. As it relates to technology, antitrust investigations will probably continue on regardless of who's in power, and this has to do with the big US tech companies having so much market share. Our view is tech is still a pretty good place to be. Financial services is a little more favorable under Republicans, and when it comes to healthcare, both parties want to limit drug prices and continue to help their population. But you know, a welcome positive surprise is that markets have shot straight up around these election results. It is viewed that with a split government, neither party will be able to force all of their agendas and basically keep each other in check. Now, of course, the risk is that this could also create gridlock and slow down progress. In the big picture, though, does it really matter? Scotia's Portfolio Advisory Group has put together a really interesting chart that compares the gains in the stock markets to who's in power in Washington. So let's check it out. What we're looking at here is the S&P Total Return Index was basically a measure of the US stock market going back almost 100 years. The blue lines are when a Democratic president is in power and the red is a Republican. And as we can see over time, the markets do trend higher regardless of who controls the White House. Of course, there is some recessions that happen about every 7 to 8 years as well. But the point here is markets do trend higher no matter who's in Washington and the White House. Okay, switching to health matters. As predicted, a second wave of the pandemic is hitting many parts of the world. The positive news is that governments have actually been quite selective in what they shut down in trying to avoid toppling the economy again. Then just recently, Pfizer from the US announced that their vaccine has shown a 90% effectiveness rate, and markets have soared for a few days on this news. We think the rush of the market will slow down as everyone realizes that there's still some hurdles to overcome here, and it will be some time until any type of distribution plan can be set into motion. Besides Pfizer, just so you know, there actually is 3 other major pharmaceutical companies that are in the final stages of testing, all in a race to become the world's preferred provider. At this point, it now looks like it's just a matter of time before COVID is under control, and with that in mind, we need to look at what's next. So as mentioned, in the short term, we're still dealing with US election results and obviously COVID. But what comes after that? Well, we believe there are reasons to be optimistic as we head towards 2021 and eventually into 22. In fact, we see 2 boosters for markets. The first is that there will likely be another round of government stimulus measures, especially from the American and to a lesser extent, Canadian governments. This will help to keep the economy going. Second, if timed properly with an effective COVID treatment, this combination should be very positive for investment markets. Many of the world's brightest economists believe that once COVID is out of the way, global growth should take off And we've even seen a few very optimistic comparisons to what happened after the last major worldwide pandemic, which happened in 1918, which was what was known as the Roaring Twenties. Like many of you, our team is looking forward to 2021, and we are keeping a close watch for opportunities to add to growth. But it's important to note that your plan must be in line with what you want to achieve for your financial goals. And please contact us anytime for help in that matter. We'll leave it here for today. Stay safe out there, and thanks for watching.